big day, big news we're following right now. President Trump has announced a dramatic shift in his tariff policy. The president announced he is increasing tariffs on China. Remember, it was going to be 104%. Those have now been increased to 125%, while reducing all reciprocal tariffs on U.S. partners to 10% for the next 90 days. In a post to his Truth Social platform, the president said, quote, "At some point, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable." He went on to say, quote, "I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately." Treasury Secretary Scott Bessent discussed the decision.
Every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
The markets responded abruptly to the news after a rocky start to the day. You can see a mix of green and red on the board, but look at when that decision was announced and the spike in green. So the Dow is now up almost 7%. The S&P 500 is up 7%, while the tech-heavy NASDAQ is up more than 9%. Kelly O'Grady is going to explain why in a second. But CBS News senior White House and political correspondent Ed O'Keefe is in Washington alongside me on set with Kelly O'Grady. Ed, let's go ahead over to you. I know that you asked the Treasury Secretary a question. We're working on getting that so that we can play that for our viewers. But what does your reporting show on what's driving this policy shift?
Well, the secretary said that he met with the president this morning or earlier, and they ultimately essentially got him to this decision, which is the 125% reciprocal tariff on China, a temporary pause on higher tariff rates on the rest of the world, but everyone's still now subject to a 10% tariff. Notably, though, and this is what I don't think the markets have heard yet, he was asked later, what about those sectoral tariffs on things like pharmaceuticals or certain other goods? And the secretary said those remain in place. So really the only thing that's happening is everyone is facing a 10% reciprocal tariff except China, who's facing a 125% total tariff now. And if you're in certain sectors, those remain in place. The goal here is to now force conversation, negotiation over the next 3 months into early July. And if it's like anything else this administration has done, that deadline will move to try to get these countries now to a more favorable trading position and not have them necessarily completely cripple and crumble under the weight of something more than 10%. It is true that the secretary has heard from and met with Japanese, Vietnamese officials, expected to meet or be in close touch again with South Korean and Indian authorities as well. And notice the geography there, all of them next door neighbors to China. I asked him, is this about the rest of the world versus China? And what he said was, in essence, well, let's play it then. Canada, Mexico and Canada, are they part of the 10%?
Yes.
Okay. Second, given then that you have the rest of the world essentially calling it, it's not China, is this now just all about China?
Well, it's about bad actors, and what we will see is some of the very early countries are China's neighbors. That we're going to see. I'm seeing Vietnam today. Japan's at the front of the queue. South Korea, India. So we will see. And as I've repeatedly said, and President Trump has been saying it for years, China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems. And indeed, they are problems for the rest of the world, because what we've seen is that as the U.S. announced the tariff wall last week, many of those goods have already started flooding into Europe.
So as you see it now, this trade war is China versus the rest of the world?
Well, I'm not calling it a trade war, but I'm saying that China has escalated, and President Trump responded very courageously to that, and we are going to work on a solution with our trading partners.
So that gives you an early sense of where this administration is on this. They reiterated, Lindsay, that this was the president's decision alone, and yet we know that the Treasury Secretary, the Commerce Secretary were among those in the Oval Office with him as he made this decision. Also notable, the U.S. Trade Representative is testifying before the House Ways and Means Committee right now, and during that hearing signaled that, yeah, he knew this was a possibility, which led to some lawmakers questioning why he had not signaled that sooner during his testimony. So there's some confusion and anger with all of this up on Capitol Hill as well. But of course, the moment, almost immediately, we started to see the markets rebound, which is part of what this is about, a desire to try to rebalance things. And of course, there were concerns about how the bond market had been reacting overnight into today as well. But now this may start to push things back into positive territory. What we still don't know, what we want to know for certain, 10% for everyone but China, okay. Which sectoral tariffs remain? Who's on the call sheet? They still have not told us of those 75 countries who's called and who hasn't. You know, at that point, then what are you negotiating with each of these countries? Are you really going to put together 75 plus different arrangements? Or are you going to potentially try to get blanket decisions made by some of them? And remember, the other thing that they signaled yesterday, this isn't just about trade now. This is about the scope of American foreign assistance. This is about whether the U.S. military remains in a country or in a region, and whether those countries potentially have to help pay for that military presence. So, and then, as the Secretary alluded to, whether or not certain countries would like to help invest in liquid natural gas extraction and export here in the United States to other countries. So developing the American energy sector. All of that now may be on the table, which sets up all sorts of complex global trade, energy, and national security negotiations, conceivably in the next 3 months.
And what did you make of the last part of his statement to you, which was, I'm not calling this a trade war?
Every expert we talked to, and I think the one sitting right next to you, would say that this has the makings of a trade war. They don't want to make it look like that rhetorically, because it invites potentially more escalation from China, at least, and certainly could continue to rattle the markets. But by definition, what's going on here as you start to raise tariffs on each other is a trade war. So they may opt to call it something else, but that is, in essence, what experts have been saying, and those that observe these things and have tracked them before say is underway.
Well, Kelly, you were invoked. Ed, hang out with us if you can. So, all right, if you want to respond to that, but also, can you help us digest what the markets are doing?
Yeah, well, just to respond to what Ed would say, yes, I think if you use that language, we have seen what has been happening in the markets, you know, in consumer sentiment. Language like that is tough for the American people to deal with, and it also does incite retaliation from the partners that are being invoked in that. In terms of what this means for the economy and the markets and everything, I mean, I'm texting with a lot of investors and companies right now. I will quote you one investor. He said, "Fool me once." And I think that that is really important, because what you are seeing happen right now in the markets is relief. It is celebration. I think Ed made a really great point that maybe we haven't necessarily digested that there are still sectoral tariffs, like on aluminum, steel, chips, things like that. But there's a lot of relief, and you're seeing that in companies like NVIDIA, like Apple. In NVIDIA particular, right? I mean, you're getting all your chips from Taiwan. If that tariff goes from over 30% down to 10%, that right there, investors are excited about that. But I quoted that one investor that said, "Fool me once," because I think we've just seen this go back and forth so many times that there's a lot of excitement today in the markets, but everyone knows, based on how this has played out over the past couple of months, that this could be rolled back in 90 days. And there could be developments in a few hours, in a couple of days. So I think there's excitement, but caution from the investment community. In the economy, we rely a lot on China, but China relies a lot on us. And so if we do get to a point where it is the rest of the world and the U.S. against China, it's going to be very difficult for them to work their way out of, because their economy is in a tough spot right now, and they need to export goods. They need to sell goods to other countries in order to revitalize that.
Do you think if we hadn't had all of the tariff back and forth and the reciprocal tariffs plus the 10% baseline, that news of a 10% tariff across the board, reciprocal tariffs, would have been, instead of met with relief, which is what we're seeing from investors today, met with equal uncertainty in the markets, uncertainty in the economy. Am I making my question? Does that make sense?
Like would 10%
is still not
right.
nothing.
Yeah. It's interesting you say that because I go back to last Wednesday. It was what the White House called Liberation Day, and they announced these reciprocal tariffs. They started in that speech by announcing the 10% tariff across the board. You actually saw in post-market trading investor excitement. It went up when he was speaking. It was only when we saw the reciprocal tariffs and he pulled out that big board with all those big percentages where you saw markets go, oh, whoa, hold on. This is not what we expected. The thing, though, is now let's sort of go back months before the administration started. The talk of 10%, 25% was getting that reaction that I think you're sort of getting at of, ooh, I don't love this. This is not good. But I think everyone has now, investors, businesses, consumers alike, has just seen these eye-popping numbers that 10% is some form of relief. By the way, businesses, how are they supposed to react right now? How are they supposed to plan?
Right, but I mean, businesses and small businesses, you've talked to them, they make their decisions for 6 months from now. And this is a 90-day pause. So they still can't make those decisions.
Well, right. In fact, I visited a fabric manufacturer, garment manufacturer a couple days ago, and she said, I'm planning for next season.
Wow,
I'm making orders that I'm committing to that I don't know what it's going to be like in a few months in terms of a tariff.
Hang out with me for as long as you can. I want to go to CBS News business contributor and Dallas Morning News business editor, Javier David. Javier, how are you reading the situation right now?
Yeah, look, the apocalypse has been canceled. You know what I joke that what the market wants, the market gets. Stocks can kind of bully Fed into cutting rates, but only the bond market can bully Washington politicians. And again, if we remember the lesson of UK Prime Minister Liz Truss, like that bond market is the biggest bully of all. It can intimidate anybody, and I think it really is key motivating factor behind why we saw the moratorium and the
Can you
administration.
explain that more? I don't understand that part.
Yeah, like, look, the administration kind of got bullied. Like, we saw a big move in yields overnight, and that was, in fact, the sort of tipping point. The bond market is $36 trillion, even bigger than the U.S. economy. And so the U.S. Government pays $1 trillion just to service interest rate payments. This is a really big factor behind why we're talking a lot about government efficiency and government spending. It's just a really big line item. And the honest truth is you can't ignore what the bond market says. We used to call them bond vigilantes because they used to push up yields. Investors that invested in bonds used to push up yields, and that was enough to spur policy changes. So I think we saw some of that at play today.
125% tariffs against China. What impact is that still going to have? It was 104 a few hours ago. Well, not even an hour ago.
Well, it's still prohibitively expensive. And again, you know, we have this strange symbiotic relationship with China where we need them, they need us, but they are also a very strategic competitor. A lot of American goods, a lot of American consumers rather, buy goods from China. And that impact from these tariffs is going to be immediate. I actually saw an anecdote where one small business owner was at one point paying $24,000 a month to source something from China, and overnight that bill skyrocketed to over $300,000. So it just kind of shows you how reliant, despite all of the fact that we talk about buying American and making American, the simple fact of the matter is consumer choice still favors a lot of these products that get shipped from abroad for whatever reason. That's what we want. That's what we're willing to pay for. And if for whatever reason these tariffs, which are a tax, are implemented, it's really the consumers that will be paying for it.
I want to bring Aaron Navarro, CBS News White House reporter, into the conversation. Aaron, what does this mean? Do we know yet on what this means for some of what we are hearing from other nations? We'll put China aside for right now. But say Canada or the European Union, who have reacted in their own way and said, OK, we'll see your tariff and we'll do this in response.
Lindsay, good to be with you. We got confirmation from Treasury Secretary Scott Bessent that Canada will kind of have that pause on bigger reciprocal tariffs. They already had their own kinds of tariffs going on, so they'll just get that 10% baseline tariffs. The question about the European Union, which approved this morning its first set of retaliatory tariffs, is one that I still have. We're waiting to talk to trade advisor Peter Navarro, who will talk to reporters outside the White House in a couple minutes. But just given that Scott Bessent and White House officials have talked about a pause being on all 75 countries who have come to the negotiating table, which members of the European Union have in regards to auto tariffs, suggests to me that they are still subject to that pause, that 90-day pause, and they're just getting the 10% reciprocal tariffs. But we'll look to get clarification from some White House officials throughout the day.
Aaron, what else are you chasing? What is your team and your unit asking of White House officials right now? What do you need clarity on?
Curious on how this came together. You saw Caroline Leavitt and Scott Bessent tell reporters that this was President Trump's plan the entire time. They really downplayed whether the stock market, what happened with the bond market, if that impacted this decision. So looking to see how this exactly came together, if things will change. We're seeing Treasury Secretary Scott Bessent really take a front row seat in terms of messaging in the past 48 hours or so. Well, the Howard Lutniks, Peter Navarro, also continue to be part of the conversation. Peter Navarro said on a fellow network that it's the whole team, and didn't really bite when asked if he would be taking a back seat. But just given how some of their comments have impacted the market compared to Bessent's, curious to see if that will change in the messaging.
All right. Thank you, Aaron. Hang out with us if you can. Let's go ahead and go now to CBS News Congressional reporter Taurean Small, who is on Capitol Hill for us. And Taurean, I imagine that some lawmakers have a thing or two to say in front of the cameras here on what's going on.
Lindsay, what's quite remarkable about this news broke during a hearing with Trump's trade representative, Jamieson Greer. He testified before the House Ways and Means Committee exactly about this issue of tariffs. And he was quite defiant, especially in pushing back against the very intense grilling from Democrats on this panel about Trump's trade policy, saying that the idea behind it is to now center Main Street over Wall Street, seemingly mocking the amount of attention and concern that lawmakers had about stocks and the volatility of the stock market. But what's interesting, right after that news broke, right after Trump's post on Truth Social, there was a quite curious exchange between Stephen Horsford, the Democrat from Nevada, and his exchange with Greer, and he asked him pretty bluntly to talk about this Truth Social post, saying, did he know about it? To which Greer responded by saying that he did, in fact, have this discussion with the president before he sat down. That enraged the congressman, who then said, did you either choose to omit that from your opening statement when you sat down with Congress, or are you not a part of these conversations? He, in fact, bluntly asked him, who's in charge here? To which Greer responded by saying that it is, of course, the president. Greer explained, though, that this is a part of the plan and the administration is acting in unison when it comes to this directive. And he ultimately believed that this is because of what he's calling a positive response from so many countries looking to come back to the negotiation table because of what he sees as a working policy in implementing these tariffs, Lindsay.
Fascinating. And you mentioned it is remarkable timing that Greer was testifying for the House Ways and Means Committee, because he was also very steadfast yesterday in front of a Senate committee on this as well. Can you characterize what he said yesterday and how it is sort of in contrast to what we are seeing now in real time?
Yeah, really opportune timing for him to be here on the Hill. Yesterday, he testified before the Senate Finance Committee, to which he was, again, pretty defiant in the president's defense of these tariffs. He received quite a bit of pushback from senators on the panel there. One from Tom Tillis, who is a Republican who jokingly, but there was probably some truth to it, asked him who should he choke out, whose throat should he choke, should this policy not work out, to which Greer said, of course, he would be the fall guy, but he again said that this is President Trump's plan and he believes that it will work out. Democrats, though, called out the curious decision to make these blanket tariffs, considering some of the countries included the U.S. had a trade surplus with, like Australia, for example, to which Greer said, hey, there are some goods that we aren't trading with them, and this is to get those goods, bring them to the table, and encourage these other countries to do so. I should also mention, even though Republicans have, at large, been pretty supportive of the president's policies, there was 7 Senate Republicans who signed on to a resolution that essentially rebuked the president's tariffs and hoped to bring the power back to Congress when it comes to levying these tariffs. None of them were a part of that panel, the Senate Finance Committee. But there were some pretty notable Republicans a part of that, including Senator Chuck Grassley, a senior member of Congress. His rebuke of President Trump's policy is pretty telling and underscores that quite a few Republicans do have reservations about just how aggressive President Trump has been on trade policy, Lindsay.
Reservations, but not enough to override a presidential veto should that legislation go to his desk. Taurean, hang out with us if you can for a little bit and flag us with any new lawmakers sound, because we know that our teams are chasing down people there on Cap Hill. Kelly, I want to go back to you on a point that Javier David made, and that was in terms of the bond market sort of bullying the administration. Can you elaborate on that?
Yeah, so this was interesting, and actually my colleague Margaret Brennan brought this up in a special report that we did on the market, and had some really smart things to say. So hat tip, Margaret.
We always hat tip her.
We always hat tip our colleagues. We all support each other here. So basically what this means is investors, people buy into the bond market. They buy the government's debt, and that's considered a safe haven because everyone thinks, if you buy into it, right, well, the dollar is strong. The economy is strong. You are buying into the idea that the government is not going to default on its debt. You are essentially loaning money to the government when you buy into the bond market. You buy their debt. And so we just had a couple of auctions where the government tries to sell off treasuries, sell off its debt, and there wasn't a lot of interest. It was much lower than expected. And what that tells you is investors are looking at what was going on with the economy, the possibility for higher inflation, and they didn't find that safe haven as attractive as they have before. And so bullying the bond market is kind of, it's more bullying the government. It's more signaling to the government that, hey, we're not necessarily really sure about this. And then Javier made a point about interest. When you have to incentivize your buyer of your debt, in this case, investors, to buy into this and say, no, it's great. You have to give them a higher return. And what that means is when we have all of this government debt, government doesn't want to be paying really high interest on that debt. That's something that you've heard Elon Musk say before of why we need to lower government debt. And so that's kind of where this concept of bullying is and why we look to the bond market as a sign of how investors feel about the economy. Because if they're going in and they're saying, hey, maybe stocks are really volatile, let me go to the bond market, though, because I know that's a safe place to play out, and they don't do that, that's when you start to worry.
And so that's the bond issue. Let's talk about the manufacturing issue, because we know that one of the reasons that President Trump says that he is gung-ho and tariff is his favorite word above God and country and family and love is, first of all, to level the global trading playing field, but also to bring manufacturing back to the U.S., which you have told me time and time again takes time. It takes years. And so companies, both big and small, as they're watching these developments, are they now going to invest in bringing productions and manufacturing back to the United States if every 90 days or even sooner we could have a change in policy when it is a significant investment?
I'm so glad you brought this up, because when I saw this come out, I put my company hat on. And if I'm a CEO, I'm going, okay, well, if I'm invested in China and I get a lot of my goods from China, this is a clear message. I need to get out of China. But it takes so much time and money to develop that in the U.S. And labor costs more. Everything costs more. This 10% tariff on all of these other countries just incentivizes me. Well, let's see if I can do this in Vietnam. Let's see if I can do this in India. So this makes me kind of question, well, is the president really saying, I want to bring manufacturing here? Because right now businesses are planning and they're looking for alternatives that are as cheap as possible. And the cheap option is not to bring it to the U.S. It's to go to Vietnam. It's to go to India. It's to go to these countries that have a lower tariff. But then you bring up the 90-day pause. So we've seen the president go back and forth on all of these different things. He is even suggested undermining the USMCA trade agreement that he's negotiated with Canada and Mexico under his first term. And so if I'm a business and I'm planning, I'm going, well, is the goalpost just going to move in 90 days? Or is it going to move in a year? That's where there's so much uncertainty. Which, I mean, if you're a negotiator, you want to have that uncertainty out there. I give that to the president. But if you're a business,
why?
You're looking at, well, if your
goal is to bring manufacturing back, why would you want investors, business owners, rather mulling whether that's the most...
Other countries. Okay. That's where the negotiation comes in.
Okay.
Now, what I will say is what we have heard from the president is maybe, getting those countries to commit to investing in the U.S. So we could see as part of these negotiations, maybe a commitment from major companies, from Japan, from other countries, that they will bring manufacturing here.
Aaron Navarro, let's go back to you and let's talk about where we stand right now with the administration's negotiations with other countries.
Yeah, I want to pick up from what Kelly just said, because we heard Secretary Scott Bessent when asked, what do countries need to do in negotiations? Is it just reduce the trade deficit? And Secretary Bessent said one example of that are Asian countries such as Japan, Taiwan, investing in a natural gas project in Alaska right now. So in addition to trying to bring more manufacturing back into the U.S., further investments in energy projects was something we heard from White House officials today. We also heard Peter Navarro, the trade advisor for the White House, say and argue, and we've heard this from President Trump, that these tariffs are part of an overall plan that's lumped in with the tax cuts that President Trump wants to see from Congress, in the hopes that if there are any kind of costs that businesses, corporations need to kind of suffer or eat because of tariffs down the line, that tax cuts passed by Congress in Republican hands could help offset that.
All right, Aaron Navarro, thank you so much. Again, keep hanging out with us as we are in rolling coverage here on CBS News 24/7. I want to go to Barron's markets reporter Jacob Sonenshine now. Jacob, if you're with us and if you can hear me, what is your read and your take on everything that has happened in the last few minutes and all that you're digesting?
Yeah, so a few things stand out to me immediately. So just to orient people, the S&P 500 bottomed out somewhere, I think, on an intraday basis around 4,800. The peak that it fell from a few weeks ago was 6,144, and the rebound today brings it to somewhere around 5,300. 5,300. That's still a few hundred points below where it was on Liberation Day when Trump announced the worse than expected tariffs. We were somewhere around 5,600. So today we've come back to 5,300. So what it means is the market is reacting to the positive tariff news, this somewhat of a 90-day pause, positively. Of course, it has to take that into account. But because we're not back to the level that we were at pre-Liberation Day, right before the tariff announcements, the market is saying we don't trust this completely because there's a lot of flip-flopping that's going on from the president that we remember from his first term that we're getting a little bit this term again. So my first thought is that the market's still a little bit skeptical. But my second thought is that if the market starts to come back down, because it probably will still be pretty volatile, you're going to get an opportunity somewhere around 4,800 or 5,000. That's, in my opinion, when stock prices start to reflect really bad stuff, and you got to go in and buy.
So you had mentioned S&P. Let's talk NASDAQ, because NASDAQ dipped into bear market territory. Where is NASDAQ right now?
Yeah, so I was looking at the S&P 500, so I'm not 100% clear on exactly where the NASDAQ is relative to prior levels. But what we do know is none of the indexes, the Dow, the S&P, the NASDAQ, Dow doesn't matter. The NASDAQ, the S&P, they're still not, the NASDAQ is not at its pre-Liberation Day level. And it means that the market is still skeptical and it still needs to be skeptical. But what that means is when you get any kind of disappointment on tariff talk, when you get any kind of disappointment on the economy, if as your prior guest was saying, businesses reduce their investment, reduce their hiring because they don't know what to do and they don't want to, spend waste their cash, right? Any bad news is going to knock stocks down a little bit. But now we're starting to have a pretty good idea of where those support levels are. By the way, when the S&P was at 4,800, if it goes back towards there, if it goes to 5,000, somewhere around that bottom level again, it's trading at a level where even if I reduce earnings estimates for companies on the S&P 500, it's trading at a level that isn't so expensive based on those reduced earnings estimates. So we know, based on this bounce and based on valuation, in my opinion, if this rally gets sold a little bit and it fades and we move back down a little bit, it's a good opportunity to start buying stuff. I just told my family to start buying stuff, not individual stocks, but the market.